Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Wednesday. In today's little program, I want to talk about how the market currently is sort of praying for calmness after yesterday's total carnage on the back of the USDJPY reading, plus some other developments about the US housing market and signs that we might actually get proper intervention from the Bank of Japan. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So yes, as it stands at the moment, the market's sort of, praying for calm, because let's face it, yesterday was the worst day for stocks since 2020, since the outbreak of COVID and the lockdowns hit everything. And for now, and I say now, stocks do remain steady after surviving yesterday. On the opening bell, the S&P 500 was up by 0.3%, and the NASDAQ was up by 0.3%. Okay, from the US Open, and they're holding steady at the moment. And we'll have a look at them in a moment. But at the end of the day, there is simply no hiding from the Fed. No hiding from the Fed at all. Because after yesterday's reading, there is no other alternative other than the Fed to continue being aggressive with interest rate hikes. There's no alternative. In fact, today, rumors have started spreading of a more aggressive rate hike next week. Now, as I said previously in my video this morning, when we talked about, and yesterday, of course, when we talked about the CPI release, the market basically assumed next week that they would do a 75 basic point rate hike. And the market was hoping that the inflation would show signs that it's cooling. Headline inflation is cooling slightly, but still 8.3%, a lot higher than 8.1% expected. But it's the core CPI, which in my mind's eye is more worrying, because that came in at 6.3% versus the 6.1% expected. And don't forget, the previous reading of the core was 5.9%. And don't forget, the core doesn't accept or doesn't include energies. Okay, so it doesn't a cost of oil, whereas the year-on-year does, the headline rate, which came in at 8.3, does take into account of oil. So we could see the drop in that. There's potentially, it's still scary, but it's down from 9.1. It was a few, a good couple of weeks ago, but that's down to oil prices, but core is rising, which is worrying. So though the market had priced in and had hoped it would be, 75 next week, they thought that better inflation data would lead to the Fed only raising interest rates in November by 50. But that's not just the worrying the fact now. Now they're thinking the Fed can't do that after this scary reading. In fact, like I said, there's now rumors going around that the Fed could even do 100 basic points next week. 100. Which, is really going to start spooking the market a lot. But like I say, at the moment, the market's praying for calm and it's holding steady. Let's have a quick look and see where the S&P 500 is at the moment. As you can see, this is on a 30-minute chart. 30-minute chart. It's currently trading at 3,939 points, off the lows it experienced yesterday. But if we look at a bigger picture and you look at it on a daily, you can see the recovery is nothing. It is steady, but it has not recovered anywhere close to obviously what happened to it yesterday on the back of that. NASDAQ is the same. Okay, it's finding a bit of support and a bit of buying at the moment, around 12,025 points. But again, it's remaining steady, but not, it's not getting anywhere back to where it was before the CPI came in, or came out yesterday. On other things, of course, like I say, we have the September coming up, the 21st of September. However, we have got a little something happening tomorrow, which could spook the markets further, and that is US retail sales. Okay, now this is due tomorrow at 12:30 p.m. UTC. C. Now, don't forget, like I say, the worrying thing is if we do get a high or a good reading, this again will fuel more speculation that the Fed will be aggressive next week. If you get a poorer reading, then the market might think, okay, all right, they won't, get the confidence again that the Fed will be gentle with them, which I don't think is true. I don't think the market's kidding itself every time it thinks like that. Don't fight the Fed, as I keep saying, and I've said that in many other videos. But anyway, that's due tomorrow at 12:30 p.m. UTC. There's quite a few banks have come out with predictions already for this number. Como, and don't forget, it came out at 0% last month. Commerce Bank, it predicts an increase of 0.4. Again, like I say, that's a good reading, or would be considered a positive reading, which again means the Fed gets the green light to be aggressive. TDS predicts 0.2%. Deutsche Bank predicts 0.6% increase, and Wells Fargo predicts a 0.2%. So we do get a quite positive reading. We could see more fear in the market, but the Fed will not hold back at all. So that's something which is pretty scary. There's some other developments as well I want to talk about. And now I've mentioned this quite a few times in other videos, because though it's apparent, not a lot of people, not a lot of analysts talk about it. And that is the US housing market. And I've talked about this. I do talk about it because I think this is a bigger story waiting to happen. I really, really do. Now, US mortgage rates has risen by 6% for the first time, or to 6%, sorry, I should say, for the first time since 2008. They're at 6% for the first time since 2008. And we all remember what happened in 2008. We got hit by a huge housing crisis. And don't forget, in just recently, the last couple of months, new home sales is plunged to a 6-year low. 6-year low. So the housing market is struggling. And obviously, if we can continue to raise interest rates, mortgages are going to get more expensive, meaning people can't get into the market, which means, and this is one of the drivers yesterday of why inflation reading was higher, is rents are going up. Rents are going up for the day-to-day consumer because they can't afford mortgages. They can't get onto the market. So rents are going up. And this is why the inflation, one of the reasons why the core CPI in the United States yesterday was higher, because rents are skyrocketing because nobody can get on the property market. And we keep raising interest rates, which the Fed will do. Mortgage rates will be more expensive, which will damage the market. We'll put the current homeowners under humongous strain. So is it just a matter of time till the housing market collapses? Housing market collapsing. Is it just a matter of time till that happens? And like I say, I don't think it'll be as dramatic as it was back in 2008, but this is still going to be a massive impact onto the US economy and the global economy. So we need to do this. Another story I want to share with you, and then we'll look at the markets, some of the currency pairs, how they're doing at the moment. Japanese yen is striking back, and it's the one thing which has performed favorably today against the US dollar. The rest, other currency pairs are holding their breath, catching their breath after yesterday's massacre. But the JPY is managing straight back because there is reports that the BOJ is conducting a rate check-in for preparation for a currency intervention. Basically, what a rate check-in is when you check the draft, the rate that draft contracts are payable in a foreign currency, which means if it's true, means they are doing, getting prepped for doing it. They haven't. It's the only thing which sticks in my mind. When they're pressed on it, they don't confirm or deny that they've done that. But again, it's still hearsay. It's still talk. But this is clearly one of the most clear signs that they're getting ready to intervene. And don't forget, they haven't done a currency intervention since 1998, when the last time the yen was around these levels. So anyway, there is evidence now that they might be getting ready to seriously this time do a proper intervention. But anyway, let's have a quick look at the yen, how it's doing today. Because like I say, it is, on daily, after yesterday, where it looked like the dollar had momentum again to try and challenge to get to 145. It currently trades at 142 today, 62. So if you look on a shorter time frame, as you can see, yeah, we've had a very big turnaround after yesterday's surge in the dollar. So this rumor is really, like I say, it's a rumor, but BOJ are not denying it or confirming it. They've done a rate check, but still, this is looking, it's the clearest evidence so far that they might intervene. So this is why the yen is stronger against the dollar as it stands at the moment at 142.57. So quick look at the euro, still trading under parity, though it's keeping steady at the moment, which is, it's how it would work after yesterday. Currently trading 0.9987. Still that key level for me. It needs to break to get bullish momentum again. 1.00577. The cable, the sterling, again, trying to mount up, trying to get back, but realistically, level it needs to break is 1.16022 for me to feel confident that it has indeed potentially got back to bullish behavior. I mean, in fact, actually that level where the trend line is, that could be a potential resistance as well, 1.1605. So I keep an eye on that. Gold, again, hasn't really moved today. Managed to lick its wounds slightly after yesterday. Still trading at $1,704.36. Still range bound. Trading between that key support of $1,694 and that key area of interest for me is a resistance, $1,726. Let's have a look at this. And Bitcoin, obviously that got hit badly yesterday as well. Currently finding a bit of support, trading around that support level at the moment of $20,355. Obviously, it suffered. It's a risky asset. When you have risk-off events like yesterday, Bitcoin's going to suffer as well. What else is to come this week? We've got, like I said, we've got US retail sales tomorrow, UK retail sales on Friday, EU CPI, which I will be doing a watch long on Friday, and US Michigan consumer sentiment. The market as it currently stands, again, still steady, but still weak. FTSE in the red, negative 0.98%. DAX in the red, negative 1.30%. Eurostock 50 currently trading negative 0.18%. So there we have it. The market is trying to keep calm after yesterday. It's praying for calmness. It seems to be working at the moment. And it's pretty calm as it stands. But like I say, let's see what happens with the retail sales tomorrow. Let's see if we get more rumors as well of 100 basic point rate hike. Excuse me. And let's see if BOJ does actually do something and does actually do a currency intervention. That could be extremely interesting indeed. So that's all to keep an eye on in the coming session and the Asian session as well. Obviously, don't forget you can ask me questions anytime you wish, or simply say hello if you like. Or just let me know what your thoughts are, or what you're trading, etc. Not to worry. Don't forget, if you think of a question later, you can put it in the comment section, either on Facebook or YouTube. I will see them and I will reply to them next time I'm online. I'm live, which of course will be tomorrow. I'm back on again at 8 a.m. UTC to discuss the European session and what's happened in the Asian session, and again at 2 p.m. tomorrow for the US session as well. So please come and join me for that. If there is no questions, not to worry. Don't forget, if you're watching me on Facebook and you've enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little episode, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and liked it and found it useful, give us one of these. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really appreciate. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever ever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.